Welcome back to Long and Short, presented by TradeStation. TradeStation is a leading fintech company and online broker providing an award-winning trading and investing experience with support, education, and tools to help you navigate the markets. Warner Media, that is the company formerly known as Time Warner. They're reorganizing in the wake of the AT&T acquisition. Now, the unit, which will be led by former NBC Entertainment chairman Robert Greenblatt, will combine HBO, TBS, TNT, and True TV. Now, the new structure is expected to result in significant layoffs. That's according to the Wall Street Journal. But what might it mean for AT&T stock? With us now to break it all down is Eddie Ghabour, co-owner of Key Advisors Group. Eddie, it's great to have you on the Long and the Short. Take us through right now what this restructuring looks like. What did Warner Media and before that Time Warner look like before AT&T took over, and what's it going to look like now?
So this restructuring is going to be crucial to AT&T because right now, my personal opinion and what worries me about AT&T is the amount of debt that they carry. They have $170 billion of debt, which is a tremendous amount for them to carry. I believe they are the highest non-financial company in regards to debt. So they have to focus on cost cutting and streamlining their operations. They're also going to have to really try to get a lot of increase in regards to content and video streaming because their ultimate play that they're trying to accomplish is compete with Netflix. That's a heavy task to take on, but I think from a business perspective and stock perspective, they have to do a better job of managing their debt.
And what does that mean for the stock? I mean, it sounds like, according to this journal report, that changes could be happening now over the next several weeks, perhaps even months, in terms of this restructuring. At what point do we see this showing up in the stock?
So I think the results are going to have to show first. Right now, I'm cautious on this stock. Obviously, everyone has their own risk tolerance, but when I see a company that carries this much debt and has not really been streamlining in this regard to reducing their expenses, they're going to have to cut employees. And I think once they do that and show that they've lowered their cost structure moving forward, then you'll see stockholders be rewarded. But I think they're going to be a little bit cautious until they see results first.
What is the end game here for AT&T? I mean, is AT&T a media company? Is it a telecom company? What does this mean for people who are maybe subscribers to AT&T services right now?
Well, I think AT&T wants to be into the streaming business, okay? You look at companies like Disney and now AT&T, that's the direction they're heading in. That's the future of that industry. And the problem is there's only so many places for that space. So again, I think AT&T has challenges from a business perspective right now to be able to penetrate that market. They have the brand with HBO. They're planning to increase their content by 50%. So they certainly have the branding going for them, but they've got to get the business side set up first in order for stockholders to be rewarded with profitability. Because pretty soon you may start to hear people worrying about them being able to cover their dividend if their debt load gets too high.
Eddie, I want to stick on HBO right now because the big news last week that shocked people in the entertainment community, and I think outside of the entertainment community as well, was longtime HBO head Richard Plepler stepping down. I mean, absolutely the end of an era for HBO. This guy spent decades at the helm, helped create HBO and make it what it is today. This idea of people paying $15 a month for premium content. His influence on HBO cannot be overstated. Is HBO over without Plepler?
You know, look, you have to give him a lot of credit. You know, he led HBO. Anytime you lose somebody like that, you have to assume there's going to be a little bit of a hiccup there. You know, that's a hard person to replace, and this is the risk that AT&T is taking with this restructuring. So hopefully the people they have in place now will be able to do as good of a job and innovate on HBO, because that's a big risk. Anytime you lose a leader like that, there is going to be some type of negative impact initially. And the hope is that you trust current management, that they'll be able to find someone to replace him to try to take HBO to the next level to compete with the Netflix of the world.
Eddie, look, for the consumer, you know, what difference do they notice? A few things here. The Wall Street Journal headline this morning, the company's going to break up Turner but bulk up Warner Brothers, and HBO expected for its part this year to do twice the amount of content that it did just last year. How do consumers notice the difference in their programming?
You know, I don't think the consumer, if AT&T does their job right, the consumer won't see anything different other than hopefully better content. And that's the whole thing. That's their big risk is they're going to put a lot of money into HBO, as you said, increase their content substantially, and they've got to bring a good end product to the consumer. Because if they don't and there's a drop off, then they're going to lose customers. And now all this big investment that AT&T makes is going to be a negative thing to the stock and to the company because they're not going to get the return on their investment that they're looking for.
Well, let's take a look at a one-year stock chart of this company. Eddie, look, the shares down clearly over the past 12 months, and a lot of this came at a time of volatility in the market, but also a time of volatility for this company because it was unclear whether or not the DOJ was going to be successful in its attempt to break up this merger. Of course, the restructuring coming after the DOJ did not succeed in its effort, but it still seems like that the DOJ could appeal this decision. If you're AT&T, though, now you're operating like this is a thing of the past, and it seems like shareholders are too.
Yeah, I think that is the case right now. But look, that chart that you just showed shows the volatility in AT&T because of the uncertainty. So you have the uncertainty of the company plus the uncertainty from a market volatility perspective hurts the stock in the short term. Again, their hope is that they're reaching the bottoming out process. But until they can deliver on this HBO and the investment side of things and cost cutting, I don't think you see the stock do much until they deliver on that.
Eddie Ghabour, co-owner of Key Advisors Group. Thanks so much for joining us on the Long and the Short
Thank
today.
you for having me today.